I'm here to talk with Scott about investing in diamonds and selling a business, and then investing in real estate, private equity, and then building a new startup around that. And I had an amazing conversation. Hope you love it as well.
This is the Note Closer Show, where you get the latest developments in distressed note investing and learn the secrets of how you can control millions of dollars worth of property for pennies on the dollar. Get educated and entertained by someone who has closed thousands of deals and lives to support you in achieving the same. Now, here's your host, CEO of We Close Notes, Scott Carson.
Good morning, good afternoon, and good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson. Excited to be here with today. We've got a very special guest. This guy he's an entrepreneur with a passion for really working with investors, but he's built a tech company that's really helping so many investors out there. And I know we got so many real estate investors, but I know that so many of you guys out there in our Note Nation, and I'm not only just investing in real estate, you've also got your portfolio stocks and other things you're doing. And I'm really excited to have our special guest here. This guy is a former Navy officer in the Israeli Navy, and he revolutionized a diamond display company or technology, disrupted the whole global diamond industry out there, okay? And so with that, he became an active and passive real estate investor. He's out of Israel, which is, most of us don't know, it's our third biggest audience besides the United States and Canada.
No way.
Yeah, very much so. We get a lot of Jewish folks invest in the United States and listen to the podcast for sure. So we're honored to have, you may have heard him there, Litan Yahav join us here. And he is the CEO and founder of Vyzer. And so welcome to the Note Closer Show, Litan.
I appreciate it. Sorry for interrupting the introduction. I appreciate you, and thank you for having me on the show.
Yeah, no problem at all. Hey, it's good to be excited about stuff there. But I have to ask you, how do you get into disrupting the diamond world? I mean, that just doesn't something you hear about taking place. Because isn't that kind of, and we'll get into the real estate stuff, but that when you put that talk about your bio, it's like, whoa, isn't that kind of a closely guarded industry where you really got to know that and be in the know in that industry to do anything, or no? How's that kind of work?
You have no idea. It's such a crazy industry. So a little background on that. So I after the military, I went travel the world a bit, and then went to school. And then during my last year of study, sort of part of this entrepreneurship program, where sort of a group of people need to think about an idea and build a team around it, and sort of like build a startup with throughout studies. And sort of we did a friend of a friend sort of took us around the diamond exchange. And now I don't know many people, if everyone knows, but Israel is like a very big diamond hub for trading and manufacturing diamonds. It was a lot bigger back in the day, but now it's still there. India has taken basically over everything. But sort of a friend of ours took us around the diamond exchange, and it's like you go in this super secure building, like you've never seen. Like in the military, you don't see this type of level of security, and you go to this super secure building, and then when you go through security and you're down and you're in the building, it's like you go like 50 years back in time. And if you try to imagine a building, like long hallways and doors throughout the hallway with notes written in handwriting saying, I'm looking to buy this and this diamond, I'm looking to sell this and this diamond, and then people walking through these hallways with suitcases full of diamonds, just knocking on doors and trying to sell and buy diamonds. And there's a whole trade of diamonds from like a B2B wholesale type. And it was really old fashioned. I think the advantage of coming from outside of an industry that's such an old fashioned one, you don't have the inhibitions or the limits to, hey, wait, this can't be done. And we had a lot of rejects when we were researching this, and like people telling us, I want to smell the diamond before I buy it. I want to see the life of the diamond. Anyway, so yeah, we stumbled upon that industry and fascinated by how different it was from the way other things are happening in the world. And so yes, that's how we reached that. Very lucky, and it went well.
How long did it take you? And I understand the entrepreneurship program. I studied entrepreneurship as getting my master's and MBA, stuff like that, and working through that. And yeah, you come up with something. But that's so many older industries out there are like, well, you can't do it. And then the question is, why can't you? Well, that's just how we've always done business. You know what I mean?
Exactly.
And we see that too in the distressed real estate space. Oh, you can't do that. Well, why can't we do that? Well, it's because this is how we've done it forever. And, you know, it's the old kind of philosophy of, oh, I walked up 20 miles to and from school, or working 20 feet of snow. You can't get around all this kind of limited beliefs in a lot of cases. And I don't know how many, you said you got rejected a lot, but then it finally changed. Was there a specific point where that kind of revolutionized in your mind, or people started catching on to what you're really trying to put to do?
Well, I mean, I don't know if real estate works the same way in that sense, but sort of the diamond industry is a very family run. These are very family run businesses.
Mm-hmm.
And, you know, the kids that were born with iPhones in their hand were starting to take lead of the company and say, hey, this makes a lot more sense than how things used to be. And so we were really like, the timing, as I say, timing is everything. The timing was like, like I said, we were lucky to be there at the right place, the right time. And there was a lot of hard work by our side. We did a lot of like footwork to educate this market that what we're doing is good. Like one of the hacks we did, and I think this is relevant for a lot of industries, is sort of when you go downstream, and downstream I mean we went to the manufacturers of diamonds, and some of them we offered our services for free. And what we do is they'd bring us their diamonds, we'd photograph them in our machines, and then they'd receive a link for these diamonds. And it's a sort of imagine like a web page with this amazing image of a diamond rotating, and you can interact with it. And it was a watermark with our name on it. And so when that diamond manufacturer in India would send that image to a store in San Diego who wanted to buy diamonds from the manufacturer in India, they'd see that and they'd see this amazing thing, and they can already view and understand like, all right, this is a good diamond. It's worth the money. All right, I'm going to ask them to ship it over. And so the next time they want to buy a diamond, they're going to already ask for a Segoma image, right? And so when you manage to create a demand from upstream, it helps educate the market. And I can tell you, like in our current business, like one of the things we're trying to do is, we'll dive into it later on, but sort of like when you think about the world of lending, and like many real estate investors, active real estate investors, when they want to apply for loans or stuff like that, they need to fill out, personal financial statements, PFS statements, and balance sheets, or whatever. And there's no standard for that, right? And so if our platform, if you already have everything in it and you want to generate a PFS, you just click a button and there's a PFS, and then you can educate. All right, you don't have to do anything, and then that might become a standard for generating personal financial statements and help people. Anyway, so that's sort of like, oh, you go to a lender, hey, well, I want the PFS from Vyzer. I don't want the PFS from your crazy spreadsheet, whatever you built like 20 years ago. Anyway, so yeah, so I think building that demand bottom up is also pretty helpful. It's hard, right? But it's
yeah, but it's an uphill, but it's still, though, it works though. You have to take in consideration that kind of both sides, the upstream and the downstream, and how it affects both of us. And we see that definitely in the markets here in the real estate, especially the last few years, as all these iBuyers of, these virtual buyers are coming in, and people investing not only from here in the United States outside of their own market, but across the country, across the ocean, in a lot of cases, of how data is evaluated, how appraisals are figured out. It's not just a Zillow value. In a lot of cases, you've got to figure out, okay, what are comps and what are marketing, and then what are the numbers behind them. And we see that specifically in the debt industry, because a mortgage is not the property. It's a different evaluation of figuring, okay, the house is worth this, but what's owed, and what's the likelihood of the borrower, not performing or starting to get back up if they've been non-paying, and figuring exit strategies. And of course, when you have a national or world something bad happen like COVID, that throws a lot of wrenches in the machine to make things work. So figuring a way to evaluate things and give everything a standard that everybody can agree to is often very difficult in a lot of cases.
Totally.
So what made you go from where you're at there? You're successful changing company, you sell that company, and then what led to Vyzer? I mean, were you just sitting around just bored off your ass, like, okay, I sold a company, I got 2 kids, I'm playing Legos all day with my boys?
Yeah,
that kind of evolved.
So we sold a company back in 2015. We made a good deal and stayed on for a few more years to scale the business even more. And in 2018, me and one of my co-founders decided to move on. But sort of the exit was in 2015. We made money. We didn't make tens of millions of dollars, but we made enough money. And sort of we decided to manage it on our own. And when you have money and people obviously try to offer you their services to manage your money for you, we decided to do it on our own, really believing in the private markets more than the public ones. And the cool thing in Israel is that everyone knows the guy. Like everyone knows someone who does real estate or private equity or stuff like that abroad. And we just started to meet with friends and friends of friends and sort of allocate funds into real estate in the U.S. and Europe and into syndications and other types of funds. And we also did 2 active real estate deals. We bought 2 single family homes in Ohio, which were, I mean, turned out to be really bad deals. And we only got rid of them like a year or two ago. And since those 2 deals, we decided just to do LP investing in syndications. And that started to evolve, and we did, 1, 5, 10, 15 deals, and then reached 30 deals. I mean, we've done a bunch of those deals over the past 7 years. And from a personal perspective, it's like, well, that is amazing because it's great passive income. You're really exposed to real estate, and usually sort of the returns have at least have the potential to be phenomenal. And like IRR and refis and all that type of stuff, it comes out really well. But one of the things we found is that over years, when you allocate and diversify your portfolio, we've done about 30 something deals with 10 different operators over the years. And these are good problems to have, but at some point you reach just like, all right, this is hard to manage. Like our spreadsheets became insane, and multiple bank accounts and cash coming in, and like we reached levels where we received these quarterly updates from operators saying, hey, this quarter you're going to receive this and this cash, and we're like, scratching your head, wait, how much did I invest in this? Right. Is this what I was supposed to receive? Is it like, all right, and even if I remember at that point, then only a week or 2 later, it's going to be in my bank account. And I'm going to go through the whole process again. Like, hey, wait, what's this? And again, these are good. I can't complain. Like, these are good problems to have, right? But they're still like, and we really believe in passive income. Yep. I don't want to be active. I want to be passive. I want to trust people that they're going to make more money. They're not going to screw me over. They might. I mean, things might happen. Market that happens, right? But yep. I know that anyway. So at some point, about 2.5 years ago, me and my co-founder Tomer decided to build ourselves for ourselves, just a piece of software. We hired an engineer and just like, all right, let's build something to automate a bunch of this process. And while doing so, a bunch of friends and family wanted it as well. We said, wait, hold on. There might be a whole business potential here, business opportunity. And we're tech, we're founders. We're like, all right, there's a problem. Let's see if we can solve it with tech. And we started to research the world, speaking with like hundreds of people around the world, specifically in the US, and asking, all right, people like us, what do you do? We found there are millions of people like us that at the end of the day have to choose between either maintaining a spreadsheet or paying someone tens or hundreds of thousands of dollars a year to help them manage their money. And usually it'll be a bookkeeper or something like that, because wealth managers don't like to go into the private markets that much, especially if it's not deals they bring to the table. Yep. Again, I mean, when you reach, the tens or hundreds of millions, you build your family office or that type of stuff. But for people that have money and have that complexity, but don't have a solution, those are the people that we're trying to bring value and solve problems. So that's sort of what led to build Vyzer.
Well, it's such a great thing there, because you're exactly right. When you have independent advisors who, the folks that work for the major firms, they don't want to mess with the real estate deal that the investor's doing, because they're not making commission on it, but they still can often figure out assets under management or bringing opportunities to the table to help their clients out. And sometimes they just don't, because the visibility is not there. In a lot of cases, how's that working? When's that going to pay out? When can we reinvest that into funds or options or whatever's going on in the market out there? It's not always a great conversation in a lot of cases, but that's you hit something on the head there. Those that have the money, the family offices, they get all their they got a staff of handling the numbers to take that. It's that middle area of, I'll say, in America here, really those folks that are under $10 million in value. They've got real estate deals. They may be property rich and not quite cash rich yet, but they're working through the aspect of bringing in passive income, and they're managing their other investments out there. But it is, most of the time, like you said, it's a spreadsheet with sticky notes. You know what
totally.
I mean?
I've spoken, I can imagine, I've spoken with hundreds of people, and there are people that put sticky note, like they don't know, and then their spouse will ask, like, "Where's our money?" And they'll go and they'll put sticky notes on the refrigerator. Or some other people, like, I mean, that they have no clue because it's in their head. I mean, it's just like it's totally crazy. And these are people that the ironic part of this is that they're people that are managing like really successful businesses,
Yep.
and they will never let their business run that way. But their personal life is totally berserk, right? And so it's because it's hard. Like people, I've also actually heard people that prefer not to diversify their portfolio and invest with more people because of the hassle of tracking and managing it all. So
Well,
anyway,
but it is when people a confused mind is a mind that says no a lot of times, and you've really taken the confusion out. I was extremely impressed with the platform, and that's why we got you on here to talk about this, because it really does a great job of marrying both sets of those investments so that you can really see everything in real time and keep up with it, and not a lot of, okay, what are we doing this week? How are we making this thing work? What were some issues that you ran into initially that you worked to overcome when you started?
Vyzer, yeah. So one of the things, I mean, there's so many issues, I mean, when you build a startup, you're sort of right, you have this problem you're trying to solve. And usually before you try to solve it, you want to understand, right, what other solutions are there for this problem? And at that point, when you go and you research the market, you see that if there are types of solutions, right, what can you do better that these solutions aren't doing, right? And at that point, you're like, all right, well, there are solutions. I mean, there's Mint and Personal Capital and the likes of those types of companies, but they're not solving the problem for this specific industry of people that invest like in private markets or give like private lenders or stuff like that. And one of the struggles is to even quantify how many people like this are there. How many people suffer from the problem that we suffer from? Until today, we have tackled this from a bottom up and top down approach. So the top down approach is, all right, you have to be an accredited investor usually to invest in these types of deals, or you don't have to, but most people that do are accredited investors.
Right.
And so when you look at accredited investors, about 25 million Americans that are accredited investors in the US, Americans in the US, obviously, but yeah, so 25 million Americans. And so that's, but obviously not all of them invest in these types of deals, right? There are people that are retired already that are accredited investors and all they have is a retirement account. And there are others that just like prefer to have a wealth manager manage everything, and maybe they have a house and a boat. They're not really, they don't have the same issues. And so when you then, the bottom up approach is sort of looking at, all right, people that raise money from people like us, how many of those exist? So in the US, and this is an insane number, like 50,000 operators in the US, from people that have 10 investors to people that have thousands of investors. And so let's just say the median there is 100 investors per operator, sponsor, syndicator, whatever you want to call it. So that's 5 million. So I mean, anywhere between 5 to 25 million. And anyways, that's like the first. And there are many challenges throughout the way. There are product challenges, and there's fundraising challenges, and I mean, even security challenges. Because for us, like, all right, for someone to use Vyzer and upload or add all their information in their financial documents and link in their bank account, they need to trust that we're secure and private, right? And so conveying that is a big issue. And we actually pay hackers to try and hack us to make sure that we're like where we're vulnerable if at all, and we fix that. And so there are a ton of challenges building a startup, but for me, it's like, all right, I feel that there's a real problem here that we're trying to solve, and so it's worth it.
Yeah, no, totally. I agree with that. And the fact that you guys use hackers to find your weak spots is smart, but it's also, hey, how can we break this to make sure that it's working effectively? And a lot of folks don't do that in a lot of cases. They'll do some of it, but it's not the extent that you guys are doing to make sure everything, because you're right, you are providing a place for people to put the secure information to really marry bank accounts, accounting, deal flow and stuff like that out there on a regular basis for it. What's one aspect what's a positive aspect of something you've heard from other folks out there that you're just really exciting about? It's like a case study or somebody who's just like, oh my God, is now your biggest raving fan.
We have people say, listen, we waited our entire adult life for something like this. But actually, one of the cool, so we haven't launched this aspect yet, but one of the things we're launching soon is the ability not just to see what you have, but to see what people like you are investing in anonymously. And so a cool aspect there is, in these private markets, it's very hard to understand who the good operators are,
Yeah.
who the good
Yeah.
sponsors are. And if we can provide transparency there to the investors themselves, showing them, all right, this and this operator, this and this fund, and there are 500 people in Vyzer that have invested in this fund. Here, you can talk to them directly, anonymously. So you can interact with other LP investors or other investors in these funds. And so I'm just giving that as sort of an anecdote, because one of the things we've heard, which is amazing to me, is that we've had operators come to us and say, listen, I want all my investors to use Vyzer because I believe that our performance is amazing, and I don't want it to come from me, but I want all my investors to use Vyzer so that it comes from them. And then we'll already have a track record when you launch the benchmarking side of it. So now that's mind blowing for us, because first of all, it means that there are really good people out there that really believe that they should be in transparency. And two, for us, it's like it's sort of one of those flywheel aspects to building a company where you have it builds itself, which is really amazing. So yeah.
I love that. I absolutely love it. Yeah, get that momentum going and it really starts growing and the word gets out. That's a beautiful thing. Now, I wanted to ask you a question. When you talk about your investments, and what are some things that you look for in a good operator, you're looking for when you're going to put your money into a deal?
So this is very subjective to me.
Sure.
But over the years, and I'm giving that disclaimer because it's important, because it doesn't mean it's right or wrong, but because I'm going to say things that not everyone will probably agree with.
Sure.
I prefer to invest with operators that are small. So, when they don't have thousands or hundreds of potential investors, because usually when they have that amount of investors, they need a very big team,
Oh.
nice offices. They need to provide a ton of deal flow for those investors. And so every other week or every other month, they're going to send deal flow. And for me, that's great. But at some point, it's just a numbers game. Some of those deals don't go, like, not because these are bad operators, but it's just a numbers game. These things won't go as planned. And when you have such a big crew, you have a lot of overhead. And so I tend to prefer to invest in smaller operators, 1-2 man show, women show, whatever. And when they do 1 or 2 deals a year, they're like super hungry. They're going to make sure these deals are phenomenal. They're going to go like dive in and just be hungry to make sure these things like go through, because it's all they have. And the 10 or 20 or 50 investors they have in their pipeline, like, want to make sure that they're happy. So those are obviously, it's higher risk, right? Because these people usually don't have the experience the big guns have. So I usually prefer to invest with smaller ones, more emerging managers. I have like a bunch of questions I always ask now, because I've learned lessons over the years that you've seen that not everyone has the same answers to. And it's really interesting to see how these operators answer those questions. Like, one of the things that was really crazy for me is the whole element of refinance in these deals, and the scenarios that can play out in different situations. I don't know if you want to dive into that, but that's
yeah, no, it's yeah, it was gonna be let's dive into that, because it was a question I was gonna ask there for you. Yeah, for sure.
So like in refi, when you invest as a limited partner in these deals, usually there are these like fundamental assumptions of the deal itself, in terms of cash flow, ongoing cash flow, distributions, at the exit event, all that, and sort of our preferences and waterfalls and hurdles and all those like nice terminologies in real estate or in private equity in general. But like when you look at refinance events, at one point, so I invested, I don't know, 100,000 into a deal, and it was supposed to be a 5 or 6 year deal with a 8% annual cash on cash distribution every quarter. So $8,000 or 2,000 every quarter, 8,000 a year. And then after like a year or two, out of the blue, we get $70,000 back as a refinance. Now it's amazing, right? I mean, everyone wants to get their capital back, as even more so when it's sort of ongoing at the end. But then the question came up, right? Wait, but I got $70,000 back. I'm still 30,000 in. Now, what about distributions? How does it work? Is it based on the original 100 or on the remaining 30? And if it is, then how does the calculation work? Like, what if you return the entire 100? Does that mean I don't get anything now? That doesn't make any sense, because you're still profiting ongoing. Like, there is ongoing profits and cash flow. Do I get part of that? And so what I've seen is well, not every operator. It's not an indefinite possibilities, but almost all of them have different scenarios and different sort of ways they play that out. And that's a question I ask every operator now before I invest in a deal, not because it really matters. I mean, it does matter, but I want to know, but because you see their reaction. And I've spoken with operators who don't even know the answer. They're going to go and say, oh, wait, you know what? I need to go check that out. I need to think about it. We haven't thought of it. And so that says something. First of all, it says about the transparency of the operator. Maybe they're not, I mean, right, they need to check, which is fine. But also, wait, if they haven't been asked that before, or they haven't checked that before, it means, wait, maybe they're too new.
Right.
Maybe they haven't. So that's like one aspect of it that was really sort of, for me, an interesting aspect to ask. And I think everyone should ask that question because it's important. And then also there's an incentive behind this. Many operators are incentivized to give you cash back as soon as possible. Because that, first of all, it increases the IRR on paper, which is the calculation of like how much cash you return versus how much you put in. Second, because there's a hurdle into the waterfall. And I don't know, I mean, a hurdle needs to be explained, but there's a point where they say you're supposed to get 8% annualized return. And then after that, there's a split between the limited partners and the operator. Let's say 70%, 30 towards the investor, or 80, 20, or 50, 50, whatever. Once they return all their capital, every distribution from that point on already reaches the first hurdle really fast until they get profit from the gate. And also it's important, it's not bad. I think operators should make money. It's really important they profit. It's really important, but it's another thing to take into account. Anyway, so I'm blabbering on about that, but yeah.
No, it's a good question too, because I always think we've seen so many deals come across there, especially here in the United States. Apartments have been a crazy, oversaturated. Everybody's, buying apartments. And the idea that they're we're gonna have it, we're gonna regentrify it, we're gonna boost rents, and in 3 years we're gonna refinance out. You know what I mean? And I laugh a little bit. It's like, oh, you're basing 3 years in the future off of rates today. What happens if it's no longer a low rate? It's a higher rate and everything. So what is your strategy for that? And you're exactly right. They're like, we got to figure that out.
And that's super important for current times, right? Because rates are going up, and I'm one of the pessimists to believe they're going to even go up higher, faster. But yeah, totally valid question. And operators that say that it's going to be exactly the same as it was a few years ago, well, they're not sort of connected to what's happening in the market, right?
Yeah, and that comes with experience, but I really do believe that you're right. You go with a big operator, they've got a ton of investors, that you become a number, and yeah, if they're doing 10 deals, 10 or 100 deals, and there's going to be a percentage that don't go the way that they should, and then your smaller operators have a lot less overhead, which is an expensive number when you have to have nice offices and you're constantly an investment an investment rep is constantly going out and raising capital to put stuff in. There's things that can go wrong pretty quickly that, especially when we look at what happened here the last 2 years with office rents and things shutting down. Well, that doesn't mean your rent's not going to have to be paid in a lot of cases too for you.
I feel, but I do feel sort of that I have to give the flip side of it, that sort of debate, because I have heard the other side of that equation. And the other side is, well, you look at these huge operators and the advantage of that, they have an advantage. First of all, they get really access to really, really good deals.
Yep.
Before, because they have buying power, and people that they have reputation, like BlackRock or Blackstone and Cake, like these companies, like they'll get really good deals, and they have really, because of all the experience they have, they can probably vet or do their DD a lot better, more like efficiently on these. So I mean, there is a flip side of that. There's and anyone who deals in personal finance and investing always will say there's always the psychological aspect of investing, right? And so for me, I like to be closer to the people I invest with.
Yeah, no, I totally agree. Well, and Blackstone just recently had 2 funds they just pulled within house. They had a horrible aspect because they overpaid for so much real estate above and beyond that. The rental was at just that bomb. Nobody's talking about that. It was really funny when they had that happen. Like a week later, they announced a new fund and some other things they were going after. Just,
yeah,
you got to stay up to date. What asset classes are you looking at? Because I know that Vyzer can do just about anything because you're basically getting numbers in. But what's an asset class or two that you're really kind of bullish on right now?
Yeah, I mean, so I think until now I've been most of my investments are multifamily value add type deals in the U.S. I've also done some ground up development in the U.S. and in Europe, some flips, storage units. I have to say now what I'm looking into is totally another side of it, which is more industrial stuff, warehouses, factories. So I've been looking into that. I haven't invested in any of those types of deals yet, but I think that's, and also one of the things I've also been looking at farmland, which is also an asset class. There aren't many syndicators in any of those industries or classes as much as there are in multifamily and like ground up development. But yeah, that's what I'm looking at now. I think because when you look at because I believe that there is like rates are going to go up and there is a recession ahead. Those in my mind are again, this is just me, Litan, not a financial professional, just like thinking like, what are the good hedges against like that type of situation?
Yeah, no, I think you'd have to probably reach out to Bill Gates, who's the largest landowner here in the United States, down as much as he's buying up for his funds and stuff like that. But that's, I think you hit some very valid points there for you. And what's great though is have different options, different focus, and different knowledge. I mean, I think the biggest thing is always to learn about what you're investing in and have understand the risk with everything, because it's investments, not a guarantee in a lot of places out there. What do you see? And this would be a question from your existing clients that are using Vyzer right now. How much of it is a mix of your traditional stock portfolios, bonds, stuff like that, and then a mixture of syndications or other private real estate? Do you see kind of an average percentage, or is it all over the place? And you may not know that number, but just curious off the top of your head if you know.
Yeah, that's a great question. I also think we're pretty biased towards the private investors more. So our members tend to have a larger percentage in the private markets and real estate and private equity and startups and crypto as well. Obviously, all of us have public portfolios as well, but I think across the board, the vast majority are in those private markets and real estate specifically, but not only.
Any type of figuring an average of is it 50-50 you see as percentage, or it's vary a little bit, but anything to kind of surprise you on that?
I think it's more 70-30 towards real estate and private equity.
Okay, that's interesting. No, that's what I've figured it'd be a little bit more than 50, but yeah, 70-30 is not a surprise, especially with where the markets are at. But here's a great thing: when markets are down, there's a lot of opportunity to take advantage of what's going on in the market out there. Now, one of the things I'd like to ask you, Vyzer, you talked about accredited investors out there, or people that are sophisticated. What Vyzer isn't for? Is there a person out there that's just getting started investing is probably not the right spot for it, or is there? You got that mixture of in the middle, like you talked about, who's kind of on that lower end that's transitioning into using it? What would you say is a good starting spot for somebody with Vyzer?
So I think once you have, I'd say 4 or 5 passive income generating investments, that's when you want to keep it passive, and you need a system for that. And until you reach that point, maintaining a spreadsheet or using those budgeting apps is probably good enough. Yep. As we move forward and we add the aspect of benchmarking, then even people that want to go into this field of investing in those types of deals will probably receive a lot more value as well, because then they'll get better knowledge based around who the good operators are and where they should invest based on other people, and also interact with people that are like them or interested in that type of stuff. So I think the people that all they have or all they're focused on at the moment is the public markets, like their 401k and sort of like really getting started with building their wealth, probably isn't for them yet. But once they reach that point where they're interested in the more sophisticated types of product, that's when it is.
Awesome. Yeah, I'm excited about Vyzer. I love what you guys are doing and marrying the two. It makes it very easy to read, add things, take away. Excited. Full disclosure, we're having you on the Note Night in America here relatively soon on Monday night to demo, share with our audience out there, because it's such a valuable thing. We have such a great mixture of investors that listen to the podcast, that tune in, that are both passive and active, but also have a mixed portfolio of traditional investments and a mixture with the real estate side of things. And so when I was just blown away, because it really does marry it up. It's such a great tool for folks to really know where the hell their portfolio truly is at, versus trying to throw a dart against a dartboard to figure things out.
Yeah, exactly. It's like showing where it is at today, where it was at the past, and where it will be in the future as well. It's also a really important thing that people don't put enough emphasis on. Like, Like when you look at cash flow, when you have multiple streams of income or expenses coming in and going out, it's very hard to project forward. Like understand, like, where am I going to be 3 years from now? Is it good to give this loan now or to invest in this asset? Like how will that affect my cash flow moving forward? And many people in our situation find themselves cash poor, although they're
Yep.
worth a lot of money, but they're cash poor. And then you have a capital call coming up and whatever, and they don't have a way. So
Yep.
it's like that's a really important aspect. So it's also the forward-looking approach, which is really important for us.
Yeah, I mean, we always have to be looking forward, and most folks just looking where they're at today, trying to figure things out. I mean, hey, it shows I'm positive. We made profit, but where's the money? There's no money in the bank
Right.
account. How'd that work out? You know what I mean?
Yeah, exactly.
What's the best way for our audience out there to connect with you and follow you and stuff like that? I mean, you're an avid Lego builder out there with your sons on it, and you're in Italy right now too. What part of Italy are you hanging out at?
Yeah, we're on a holiday up in northern Italy, in the Lake District. So we're in Garda Lake at the moment. I was actually last week. I was in Bigger Pockets in San Diego.
Yep.
We had a booth there, and now we're here. And then I'm flying back out to the States in 2 weeks as well to another conference. But we're in Italy now, and then we're going back to Israel after that. So, and if people want to reach out to me, like I'm really available, like on almost all the social media like platforms, Twitter, LinkedIn, Facebook. You can reach out via email, and we can share all the details afterward. And me and my team are super available also on Vyzer. So yeah, totally open, listening, like hearing people, what they think, what they're feeling from our product, and whatever we can help with.
Yeah, you got an amazing team that is really second to none. He's great communication and reaching back out, and is very open to feedback and tweaking things or showing and walking people through the platform. And that platform, once again, guys, is Vyzer, VYZER.co. That's Vyzer.co. Highly encourage you to check it out. If you're part of a syndication or talk with the sponsors, talk with the managing partner, because this is a great tool for you guys to use to be able to keep track of where everything's at and going, and adds a level of sophistication versus that old spreadsheet and email aspect that things out there for most folks.
100%.
Amen. Litan, thank you so much for coming on the Note Close Show. We look forward to seeing you on Note Night in America here shortly, and have a great vacation out there in Italy. Drink some good wine for me while you're out there. Huh?
Totally, man. I appreciate it. This has been awesome. Thanks so much.
Thank you. All right, guys, check it out. Vyzer.co is a great tool, great software for you guys that are both active and passive investors with your own stock portfolio and real estate investing. You heard it here. Go check it out. Vyzer.co. You will not be disappointed. I believe it's a tool that's going to revolutionize private equity out there and syndications in the reporting stuff. So go check it out, and we'll see you all at the top, everybody. Bye.